So in 2025, prices continued to rise through February and March, supported by speculation around UF tariffs, which widened the LME-COMEX arbitrage and a strong seasonal demand from China. These have then pushed prices to the mid 9,000 US dollars per ton range. However, in late March, we saw a sharp correction after President Trump announced a 104% tariff on Chinese goods. China then responded with a 125% retaliatory tariff, triggering a sell-off across metals and financial markets as fears of broader recession mounted. And then despite this volatility, prices have rebounded quickly as buyers took advantage of the dip in the LME prices. Now, if we look at what this has meant for producer margins, we've seen a substantial shift. So back in 2015 and 2016, when prices were significantly lower, only around 72% of copper production was profitable, meaning that nearly a third of global output was being produced at a loss. However, that's changed quickly. In 2017, the proportion of copper produced at or above cost has jumped to 88%, highlighting a 15% improvement in just 1 year. That increase wasn't necessarily reflective of strong margins, but rather more assets, particularly in Chile, that were previously unprofitable, finally broke even as prices rose. So we fast forward today, and the picture is much more positive. In 2025, approximately 91% of copper production is now profitable, and this is all despite rising costs over the same period.